Just over half an hour left until the opening bell on Wall Street. Joining us now on the markets, Ross Mayfield, investment strategy analyst at Baird, which is more than $400 billion in assets under management. Ross, good morning. Navigate us through these last couple days in context of the huge rally we had at the end of last year. Is it all over? Is it just a break?
I think it's much more likely this is just a tidy kind of consolidation correction after a really breathtaking rally across November and December. So, the market was overbought by almost any metric you could look at. That's bullish over the intermediate term, but in the near term, a little consolidation here and there is not surprising, and especially with the context of investors maybe reassessing whether all those rate cuts they started pricing in are actually going to come to bear. I think there's a reality check on that front as well.
I read the Wall Street Journal's lead headline this morning. Stock's bad start to 2024 has forecasters on edge. And I thought there's so little faith in the rally we just had, I want to buy it. Is that, I just feel like people are so lacking confidence in what's happened. All of a sudden, they're ready to write the whole thing off after 2 days. I think that's a positive sign for the rally.
Yeah, absolutely. I will take any negative sentiment we can get. I mean, some of the survey data on retail investors suggests more of an optimism or euphoria after the big rally. But there are still things like what you're talking about, like the big inflows into money market funds that suggest there's just not quite this buy-in yet, that it feels somehow, not real, that the idea that a soft landing could actually happen. There's just still a lot of skepticism out there. And as you mentioned, those are the kind of things we want to see. When it's all euphoria all the time, those are the time to hit the doors. At the same time, Ross, you have to deal with the issue of valuations. What do you expect to happen? Earnings season, I think, starts next week in earnest. Some stocks are trading at relatively high historical multiples. Yeah, absolutely. And we know, valuation is not a great timing tool short term, but longer term, it matters. And when you have elevated valuations, you really need earnings and profitability to come through to help the market grow into those valuations. Otherwise you might face a lower return, kind of long-term future. The market is expecting pretty good earnings growth, double-digit earnings growth for 2024. I think that number probably has to come down a bit. But if we hear things like the report you all just, put out on retail sales and spending and the consumer staying healthy, and, we got job market data this morning that shows that things are still pretty fine, maybe the earnings don't have to come all the way down to low single digits, and maybe an expansion in profitability and profit margins is in the coffer. So, I do think the earnings expectations are maybe a little high. Valuation is a problem, but it's not something that's flashing red on our radars.